Welcome back. Futures are indicating a mixed opening. Take a look. Dow Industrial's up 117, but the Nasdaq down 38 right now as we are looking ahead to more third quarter earnings. A lot happening this morning. We've got Caterpillar, Merck, Southwest, McDonald's all out before the opening bell this morning. Joining us right now is Oxbow Advisors managing partner Ted Oakley. Ted, good to see you. Thanks so much for joining the conversation. What are you expecting from the third quarter earnings season?
Well, I think there'll be another quarter where it's decelerating, third quarter and fourth quarter. And I think people are underestimating it probably.
Decelerating earnings, even though we're expecting growth from the GDP this morning for the third quarter.
We are, but it's interesting because if you look, there's all sorts of numbers stretched on that. If you look at the St. Louis Fed's different from Atlanta, different things like that. But I just think the whole thing's decelerating. And so people will be surprised at how weak third quarter and fourth quarter earnings would be.
Mm-hmm. And the Atlanta Fed raised its estimates right now, right, on the third quarter. Just yesterday I was looking. They
did. They're about twice as high as St. Louis, I think. I mean,
what's going to make investors really wake up to the fact that we're headed into a very deep, protracted recession next year? Because there's been this habit of investors to buy the dip ahead of the Federal Reserve changing course. Even now, the optimism grows out of the Fed kind of holding pat at some point in coming quarters. But again, it was during the summer, buy the dip, buy the dip, buy the dip, because they're expecting a Federal Reserve rescue that might not be on the way.
No, Dagan, I think what's happened is the last 12 years spoiled them. And so they got used to that. And this year obviously hasn't worked, but I don't think you've beaten them up enough yet to where they realize that, hey, that's not working.
Right. Well, the spoiled need a very severe spanking to wake them up and realize that they will no longer be coddled by our central bank.
Probably so. If you just look at average investors, I don't see them throwing in the towel yet. I mean, I guess I talk to a lot of people and see a lot of other people in the industry. Yeah. But they don't seem to be capitulating at this point.
Well, Mark, the estimate today for the GDP is at 2.4% annualized. We'll also get the PCE data for September. But look at this GDP now from the Atlanta Federal Reserve. They raised their expectations to 3.1%.
Yeah, that's pretty impressive.
Just yesterday, 3.1% is a big number after two contractions.
Yeah, so we're actually expecting a positive third quarter and fourth quarter GDP before we go back into negative territory first and second quarter of next year. So just kind of, maybe that's a bear market rally in itself. I think at this point, it's almost like you're holding a ball underwater. You get a little bit of a rebound, and then we set ourselves up for all of the hiking that the Fed has done over the course of the last several months. Ted, question for you. What do you, with regards to this earnings season, what do you make? I mean, when you look at the companies that are actually meeting earnings expectations, meeting revenue expectations, they're doing so with less volume. What do you make of that?
Well, they're also doing so, as you know, Mark, by pre-announcing, and so they set themselves up to look good. And that's been an old Wall Street trick for decades, actually. And we're back into it again right now. And so I think they'll continue it, but that's what we're seeing. They'll pre-announce and set it up and then say, hey, we got really close. When if you look at the year to year, they did not.
Mm-hmm. So would you be selling into any rally then? Is that what you're saying?
Well, for us, Maria, we've already sold. I mean, we're carrying very high cash levels. But if I were a person that had very little liquidity, I would have to do that.
Yeah, I mean, Todd, you look at the housing market. New home sales were down 10.9% in September. Mortgage rates are at the highest level since 2001 now. We're talking about 7%, around just under 7% mortgage rates. That's created serious demand destruction in housing, Todd.
For that young person who wants to get into the market, you can't now. And quite frankly, it was real tough to get in because home prices were really tough at the end of 2020, beginning of 2021. I want to ask you a question. Every institutional investor I know said they've been seeing record levels of volume. And I look at that from my perspective and think, I'm not buying anything in the stock market because I'm too scared. How do you reconcile these institutional investors pouring tons of money into the market now and guys like me being like, I'm too scared, even though I have a runway of 30 years?
Well, I think what happens on that is that they typically are late I mean, it's interesting in the bear market. I've been through quite a few of them, and they always come in at the end because they're driven out by the people liquidating and doing various things. But we have so many people in the industry today that are sort of a plug-and-play asset allocation thing, and no matter where the markets are, they keep doing the same things. That to us will not work this time, because you're in a different setup right now.
Especially going into the end of the month when the mutual funds have to rebalance at the end of October, right?
That's right.
The big focus will be, though, people's losses on their homes if they have to sell, where you've already seen in the Case-Shiller numbers, they're still up year over year, but month over month, like the biggest decline in how many years. And when your next door neighbor starts selling their house for like $100,000 under the asking, that's when.
And selling them to REITs, because they're the only ones that are going to be able to buy. The
you're right.
ordinary person's not going to be able to buy because of the mortgage rates you mentioned.
Institutions buying up all the houses. Ted, it's great to have you this morning.